it's the end of the financial year, and what a year it's been. Calendar year 2020 commenced on a positive note, with most development groups indicating an uptick in sales activity and inquiry, following a period of slower sales volumes through the second half of 2019. COVID-19 hit the market in late February, which led to both buyer and seller uncertainty for development site acquisitions and retail sales. The market effectively sat on the sidelines during the height of the pandemic, resulting in a pullback in sales activity and a noticeable tightening of stock on market. In response to the impact of the pandemic, the government implemented a broad-scale fiscal response, and the banking sector responded with a mortgage holiday period to curb possible defaults. We've seen a strong improvement in market activity through the fourth quarter of this financial year, buoyed in large by the historic low interest rate environment and coupled with federal government incentives.
The federal government Home Builder Incentive Program, which provides grants of $25,000 to eligible owner-occupiers, was introduced on June 4. The impact of the grant on the land market has been substantial, with many groups reporting record volumes of retail sales over the last month throughout southeast Queensland and many major regional centres, which have had the benefit of an additional $5,000 grant from the Queensland Government. We've spoken to a number of groups who have indicated demand beginning to taper, but in some areas this may be supply driven, as much as softening in demand. We're starting to see increased stock levels and requests for marketing recommendations, with the expectation that the balance of 2020 will be an active trading period. The market appetite for well-located development sites across the land, townhouse and unit markets remains very healthy, with strong volumes of inquiry and offers for both on and off-market opportunities.
Our activity has spanned across a variety of sectors of the residential development market, both in product type and locality, with some of our most recent sales including an approved townhouse site in Everton Park which transacted for $2.1 million, a subdivision site in the Ripley Valley earmarked for about 557 lots for $14.5 million to an international group, the 46 hectare balance of the Heights Master Plan estate in Pimpama for $29.7 million, as well as an approved development site in the Northern Beaches of Mackay, which sold on a short-term unconditional contract for $750,000. At a macro level, there is approximately $950 million worth of development site sales recorded across the nation in 2020 for sales under $50 million, which is down approximately 40% on the preceding year. The pullback is generally in line with tighter market conditions, as Matt has mentioned earlier. For further insights on the market, to discuss new opportunities, development site activity or your asset specifically, please contact any of the specialists with Ray White Special Projects.